This week promises to be pivotal for the stock market, with a flurry of news and economic data set to capture investors' attention. As we dive into this week's events, it's essential to understand the key factors that could influence market movements. The stock market is bracing for a week filled with significant developments. Investors are keenly focused on several important elements, including the release of the July Federal Reserve minutes, new housing data, and a series of earnings reports from major retailers. These factors could play a crucial role in shaping expectations regarding potential interest rate cuts by the Fed, a highly anticipated move that many investors have been eagerly awaiting throughout the year. Although the likelihood of a rate cut next month has slightly decreased since last week, the markets are still pricing in an impressive 85% chance that the Fed will reduce rates by 0.25% during their September meeting. As indicated by the CME FedWatch tool, let's break down what investors will be keeping an eye on this week. Federal Reserve minutes. On Wednesday, the minutes from the Fed's July policy meeting will be released, and investors will scrutinize them closely. These minutes are expected to provide valuable insights into the central bank's views on inflation, the current state of the U.S. economy, and their future plans regarding interest rate adjustments. This comes at a critical juncture for the Fed, which finds itself at a crossroads concerning its monetary policy direction. Fed Chair Jerome Powell has indicated a preference for maintaining steady rates as officials assess the inflationary effects of tariffs. However, recent inflation data has been mixed. While consumer prices increased in line with economists' predictions last month, wholesale inflation exceeded expectations in the latest producer price index, suggesting that inflationary pressures may be building. Additionally, the job market has shown signs of cooling, with the U.S. adding fewer jobs than anticipated in July, and previous job gains for May and June were revised downward by a total of 258,000. Traders will be closely monitoring the minutes for further clarity on the anticipated trajectory of rate cuts, noted Aaron Hill, an analyst at FP Markets. The slowdown in labor market data strongly favors the possibility of easing policy next month. Ed Yardeni, president of Yardeni Research, added, "The minutes from the July 29 to 30th FOMC meeting could shed light on how entrenched the doves were and how resistant the inflation hawks might have been at the end of July." Retail earnings reports. In addition to the Fed minutes, investors are eagerly awaiting a series of earnings reports from major retailers this week. Here's a quick look at the companies scheduled to announce their second quarter results. Tuesday, Home Depot, HD. Wednesday, TJX Companies, TJX. Thursday, Target, TGT, and Walmart, along with BJ Wholesale Club, BJ. These upcoming reports will provide a glimpse into the health of the U.S. consumer. If the earnings turn out to be weak, it could raise concerns about economic growth and heighten expectations for a Fed rate cut next month. Top economist David Rosenberg referred to these earnings reports as key signposts for the week. He remarked, "The sentiment among U.S. consumers is not particularly optimistic, and as indicated in Friday's retail sales report, there is a noticeable trend toward dining in rather than dining out, which is a clear indicator of consumer frugality." Jackson Hole Symposium. All eyes will be on Fed Chair Jerome Powell this Friday as he delivers a speech at the annual Jackson Hole Symposium. This event is highly anticipated, as Powell is expected to outline the Fed's agenda regarding future rate cuts. Investors are also curious to see if he will address the independence of the central bank, especially given President Donald Trump's ongoing pressure on Powell to lower interest rates and his narrowing list of potential Fed candidates. Rosenberg noted that Powell's speech could significantly impact the markets. He stated, "A hawkish surprise could arise from any comment suggesting that the recent weakness in the labor market is primarily supply-side driven and that the threshold for job growth needed to maintain a steady unemployment rate is much lower than it used to be. Richard Saperstein, Chief Investment Officer of Treasury Partners, expressed expectations that the Federal Reserve will use the Jackson Hole event to prepare the markets for a 25 basis point cut in September and to signal a potentially accommodating stance through the end of the year. Given that this will be Powell's final Jackson Hole conference as Fed chair, he is likely to emphasize the importance of the Fed's independence from the executive branch. However, strategists at Bank of America warned that stocks might experience some selling pressure following Powell's remarks on Friday. They suggested that a dovish Powell at Jackson Hole could lead to a buy the rumor, sell the fact scenario, indicating that investors might take profits after the speech. What do you think? Will the Fed's actions this week lead to the anticipated rate cuts, or do you believe the economic indicators will sway them in a different direction? Share your thoughts in the comments below.